Focus our attention now over to the grain markets. Joining the show this week is Jeff Peterson. He's the president of Heartland Farm Partners. Here's our conversation. Let's talk about the markets as you see them. Kind of here in January, we can be a little bit retrospective too and talk about the markets since we harvested them in the fields. How do you see things?
You know, as we sit back and look at this past year, it really was a hard year of marketing for everybody. We ended up having in many parts of the area that's listening and watching us, you know, it was an area that the crops were off, and there was that big fear of missing out on the production side, and that kept a lot of people from selling. And then you look at the markets, and the whole hope with all that is that would have given us some higher markets, but boy, it sure didn't. So if we kind of go back to look at where things were at back at harvest, you know, we did get a little bit of a rally up to the middle of October in corn. It sure felt like that was going to kind of get legs and keep going, but it didn't. It rolled over and started pulling back. And the same thing on beans. We had a run up that happened, you know, latter part of October into November, kind of peaks up around that $14 area as we were coming into the middle of November, but then it rolled over. And what's really strange about all that is we are surprised that we did end up seeing those markets go farther. The reason we're surprised, if we sit back and look, what was driving a lot of that at that time was the uncertainty about South American weather, and the speculative traders were buying into that a little bit, but they didn't buy into it very much. And that weather, if you think about it, that September through December time frame, what was setting that stage in there, that was the hottest, driest time that we ended up having in Brazil. And it had an impact on the crop, but it just didn't get that market to run very far. And then really what happened is once the speculative traders rolled over and started selling the beans, we've just kind of had a steady move down. Now we've had a little bounce here lately, but it just forced that market down and corn followed along with it.
I want to expand a little bit on what you're talking about. Obviously, the funds play a big role in all of this as we talk about the futures market. How have you seen them play a big role over the past month or two? Yeah,
they definitely play a big role. And what happens, it kind of becomes about, you'll hear people talk about money flow. And really what that means is that you just got traders that are physically either selling bushels or buying bushels. And we've seen both happen since harvest. On the corn side, we've continued to see the funds, you know, get shorter and shorter the market. So for instance, you know, every Friday the Commitment of Traders report comes out, and that reports what the fund position as is of the previous Tuesday. And right now, rounding off, they're roughly short about 1.3 billion bushels of corn. That's a good position. That's a big position. That's a record position short for this time of year. It's probably the third shortest they've been over the last, call it 10 years. Over on the beans, though, we saw them shift their position. They were buying into the weather problems that was happening in South America. They got up to where they were long about 40,000 contracts, so a couple 100 million bushels. But then they started selling off long before that market rolled over, and they continued to sell off. And they didn't stop at zero. What they did is they continued to pile into that position, and now they have, you know, not a record short position, but they're building on that right now, Bryce.
Saw somebody online when asked about what are the funds going to do? Someone responded and said, well, the funds, they're going to make money. That's what they want to do. And as a farmer, you're going to be long as you are planting a crop every single year. Is that a fair way to put things?
Yeah, it is a fair way. And what we have to think about is that we always talk about that managed money. So they're going to buy or sell, and they're trend followers. And basically, if they get on a trend, they're going to continue on that trend until they see something fundamentally or technically or both that causes that to change. Now, on the other side, we don't talk about the index funds very often, but they're definitely out there. And the index funds are a long only. They buy it, and at some point they have to sell it. Usually it's used as a hedge against inflation, but we've seen them get out a lot of their positions, and they've pulled back in that, and that also puts some pressure on the market also, Bryce.
Okay, so we look at what's happening this week. A little bit of a turnaround. Viewer question came in asking, have we seen the bottom for corn and soybean markets right now?
Well, as we dig in and look at that market, you know, we've definitely seen some positive signs. So let's go back and take a look. You know, last Thursday for both corn and soybeans, market did go lower, couldn't continue to go there, and did reverse and start coming back up higher. What was interesting is that we don't see this on a daily chart, but if we were physically looking at basically a continuous chart, that would basically show each day of trade and whatever the most current month is, nearby month is for us. And we were looking at on a weekly basis, we actually just came into some very strong technical areas in there. And it looks like we did find some support in those areas. Now the market has bounced up higher here so far, but what's lacking right now is we aren't necessarily seeing anything from the news side that's going to fuel it yet. So it appears from price action that we have found a bottom, but we are going to have have to have additional information to continue to move this market higher.
What could that information look like? South America weather, perhaps?
Yeah, so as we dig into that, South America weather at this current time is actually, it's actually probably hurting us a little bit on the bean side. So keep in mind, the market peaked when it looked like the weather was actually probably at some of the worst, but yet that was a point just prior to where it started to change. And we haven't seen the lowest numbers yet, by no means out of USDA on crop size. They'll continue to get smaller. But I think really probably the story that could actually give probably more support to the market down the road, Bryce, actually could be that safrinha corn. And not only safrinha corn from the overall production, but it is two-sided there. You're going to end up having the acre side, and there's a lot of discussion out there that could be 5% less acres, could be up to 25% less acres of safrinha corn. Now keep in mind that safrinha corn crop normally makes up 75 to 78% of all their corn production. And so it does look like there's going to be less acres. Now how much, that's going to have a big impact on the market. As we dig into that deeper, the reason becomes, well, why is that happening? Well, it's because of profitability. And we're going to have to watch very closely if that materializes. The other side of that discussion that has to unfold yet would be the yield side. And the yield side, the so concerning part about that really gets back to, what are they going to get that timing of the planting of that crop? And then what's the weather going to be as it gets into the pollination and early ear fill stage, which happens out in April?